Hello, everyone. Good morning, good afternoon, and good evening to you, depending on whichever part of the world you are tuning in from. Well, I'm grateful for life and thankful to be with you here this morning as we open the new week on a very strong positive note. Happy New Week to everyone in the house. Before we kickstart the session, let's confirm that we are good to go this morning. So, if you can see my screen and you can hear my voice clearly without distortion, please type in hi in the comment section, as this will give me a feedback that we are good to go. And if the sound is not okay or the visuals are not too good, please let me know, of course, as this will also enable me to do the necessary adjustment that will make our experience better out here. So I would like to see some feedback, please. I'm waiting and waiting to see some feedbacks while I load up my comment section. Okay, beautiful. So I can see a handful of comments here. So we have 8180. Thank you very much. 963 says is new here, glad to have you around. 810 also says is new, glad to have you around too. 390422 Dubasi, good morning to you, thank you very much. Amir, good morning to you. Hey Harry, good morning to you, glad to have you around too. 626 5517, good morning to you all, and thank you very much. So I think with this comment here, I will take this as a positive feedback that we are good to go this morning. So it's on this note I welcome you all to yet another promising edition of the X Trend Speed Live. My whole name is Sheriff Daramola, and for the next 1 hour I'm going to be your host as we take a fresh new look at the financial market in anticipation of the New York session. In fact, we have very interesting setup going on. I have I have a handful of assets we have found interesting and insightful setup that I would love to share with you, and of course we shall be using them as a guide to identify potential trading opportunities. And of course this week promises to be interesting as we have the last trading day of the week of the month and the first day of the month happening within this month, which is likely going to bring in some voluminous trading activities during the week. And for those who are joining us for the first time, you are highly welcome on board. And in fact, you might be asking that what is happening here? What are we doing here? Well, we come together as a community in anticipation of the New York session on a daily basis to review if we do have any positions running, and at the same time get ready, position ourselves strategically for new opportunities during the New York session today. So it's a price action based technical analysis we do here, and we do this we start 10 a.m. UTC, 11 a.m. West African time on a daily basis. The more time you spend with us here, the better you become in understanding how this works here, and eventually be able to use the information you have gathered to make your own independent trading decision. So I encourage you to stay tuned in, be part of the session till to the end, and of course be part of the subsequent session. So once again, you are welcome. So with that being said, we shall be diving right into the business for today, and as usual, we are going to be starting by checking on the economic calendar. And we all know how important the economic calendar is, as these fundamental factors often manifest on the chart in technical patterns and price movement. By monitoring the economic calendar, we can easily identify potential correlations between key economic releases and specific technical patterns. Now, on the economic calendar, we normally focus on high impact events from the economies that affect the asset that is on our watch list. Now, for those who don't know, the assets that I have here involves something from the United States, the United Kingdom, and the Japanese yen. And that reminds me, for those who are joining us for the first time and those who are still with us, today is the first trading day of the week, and it's a very good time for you if you have any assets or commodity or instrument you want us to look at for this week. Drop them in the comment section as if we can trade them today. It's going to be an asset or instrument we will be monitoring throughout the week. So let's see it in the comment section if you have any, be it cryptocurrency, commodities, options, or currency pairs, whatever you have. Let me know in the comment section, and I will try as much as possible to incorporate it into our plans. So for today, Monday, August 28th, we do not have any high impact event to look out for. But I went further to include the medium impact event just to have a scope into what majority in the market will be looking forward to. And what I was able to come up here with something from the Japanese economic docket, and that is the unemployment rate, which comes from the Ministry of Health, Labor and Welfare. It is normally published by the Japan Statistic Bureau, and it is a measure of the percentage of unemployed people in the Japanese economy. A higher percentage indicates weakness in the labor market, which of course influences the strength and direction of the Japanese economy. Now, the previous data here for the month of June came in at 2.5%. So we have economists projecting a 2.5% for the month of July. So we shall be looking forward to see what the actual data is going to be. Will it be just as expected, below expectation, or even beyond expectation? But one thing for sure here is that as technical traders, what we are going to be doing here is to sniff through the current market structure to look out for structures and patterns that will help us position ourselves strategically in such a way that we can capitalize on any potential move prior, during, and even after this event. So with the information we have gathered so far, we shall be diving right into the business. And as usual, the first asset we are going to be taking on today is going to be the US Oil Spot. And in fact, the US Oil Spot was an interesting asset for us last week as we took in some buying and selling opportunities during the course of the previous week. So as we take a fresh new look at the market, I would like us to run through the higher time frame one more time to see how things have been going on here. So we shall be starting with the 4 hours time frame, which is where our first analysis is going to come up from. Now on the 4 hours time frame, looking at how the nature of price action has been since the mid-month of June, it is quite clear that price action has been on a very strong bullish momentum. And to further emphasize this, I was able to connect the series of higher lows here, giving us this ascending trend line, which of course has been supporting the bullish momentum in the last 8 weeks or so, 8 to 10 weeks now. And of course, it's going to be a major parameter. It's going to be one of the parameters we are going to be using to guide our trading activity for this week. And for those who have been with us in this community, you know how we use our ascending trend line. As long as price remains above the ascending trend line, we shall continue to look out for patterns and structures that will support the idea of buying that asset. Now, in addition to that trend line are a couple of levels here that we shall be using to guide our trading activity. Now, look at the first one here is the $78.50 and the $78 area, a zone which has been a strong buying niche since the last week of the month of July. Now, if you look at the structure closely, you will see that since price broke out of this level, during the last week of the month of July, we saw here how sellers have struggled to break through that structure. Every attempt by the sellers to break through has been met with strong resistance from the buyers, as you can see here. Now, if we fast forward into last week's trading session, we saw how despite the strong bearish momentum that came in during the course of last week, we saw how it became difficult for sellers to break through that area. And as a result of this, this is a significant signal that this zone here will be serving as a potential demand zone. As you will see, since price is unable to break through that area, it further clarifies that buyers are present around this point. Now, besides the $78 zone is the key level at this $80 area. Remember how important the $80 level is from a fundamental standpoint. This is the mark where the OPEC Plus member want price to be at least in a minimum, and from a technical standpoint, it has been a major determinant of price action throughout the since the beginning of this month. So we have the $80 level, and because of this importance, we shall be using it as our key level for this week. So what this simply means is that if price breaks out of that key level, we look out for patterns and structures that supports the idea of buying. And not if price remains below the key level, then we shall be looking out for selling opportunities. Now, to cap this whole structure here is this descending trend line. As you will see, since the beginning of the month, price action has been finding lower highs in this particular market. And when we connected the series of lower highs, we have a descending trend line to work with. Now, despite the lower highs here, the first thing that comes to mind is that we are on a bearish momentum. But of course, if we look at the structure closely, despite the lower highs, you will see that price is here to find a lower low to affirm the strength of the sellers here. Now, the inability of sellers to break through this level for me is a sign that there is a high chance that price action will be breaking out of that descending trend line. Now, a breakout of that descending trend line will be a signal that that trend line may no longer have the capacity to continue to negate the bullish attempt. And of course, the trend line here also shares a confluence with that key level at the $80 mark. Now, you would agree with me that we are at a crucial juncture in the market where the $80 level and of course the descending trend line shares a confluence, and depending on how price action or how market participants react to this level is likely going to be determining where price action will be heading to this week, or at least for the first half of this week. Now, for us to have a better perspective into what is going on, we would need to scale down to a much more lower time frame, like the 1 hour time frame, for us to see how market participants has been reacting to that $80 level. Now, scaling down into the 1 hour time frame, this is what I was able to come up with this morning. Now, looking at the 1 hour time frame, we can see how participants has been relating to the structure since the beginning of this week. Now, if you look at the structure closely, you will see that the week started at around the $80 level, started with a selling pressure, and as a result of this trading activity, we have price action confined within a range between the $80 level and the $79.50 level to emphasize this level of indecision in this particular market. Now, you know how we do it whenever we have a flat channel like this. We want to exercise patience, waiting for either a breakout of the resistance line of that channel to give us an opportunity to buy, or the breakdown of the support line of the channel to give us an opportunity to sell. Now, with this scenario here, price still remains within the range, so we want to be very, very patient here. And don't forget how important the $180 level is the resistance line for the week so far, and in fact it also shares a confluence with our descending trend line we spotted on the 4 hours time frame. Now, if you look at the structure closely, you will see that we already had a breakout of the structure during the early hours of today, and price action appears to come down again. So in that regard, I'm of the opinion that price action is likely going to be breaking out of that resistance line to incite an uptrend continuation. So with the breakout retest of this area, I would like us to have a buy stop order anywhere above the $180 zone to capitalize on an uptrend continuation. So that is how we are going to be buying the US All Spot for today. Anywhere above the $80 level seems most appropriate and reasonable to join any bullish attempt at this point. However, if price action does the contrary and instead it drops below the $79.50 level, then we shall be looking out for selling opportunities. Now, the $79.50 level, which happens to be the support line of that flat channel, is the parameter we are going to be using today to look out for selling opportunities. And considering the fact that price still remains below the key level at the $80 mark, and of course below the descending trend line we spotted on the 4 hours time frame, it makes more sense to look out for selling opportunities if price action will break down the $79.50 level. So we do want to be marking out these zones and levels on our chart, as we shall be using them as a reference point to guide our trading activity for today. And of course, if price action goes on to break down the $78.50 level, we will be adding more position to our existing trade. And of course, I would like us to remember and take note that the $78.50 level and the $78 area has been a strong demand zone since the month of July. So if price breaks down this $78.50 level and continues to the downside and we sell, let's ensure that we are be on standby to move our stop losses accordingly as price action moves in our favor, because that area seems to be a buy zone, a buyer's territory at this point in time. So this is my view here on the US All Spot for today. So we have a simple setup that we shall be using to guide our trading activities for today's trading session. If you have any questions whatsoever as regards to my explanations, or you need me to do clarification on a particular aspect, feel free to let me know in the comment section. So I will be taking the next 10 to 15 seconds to see if there are any questions whatsoever. And of course, you can use that time to mark out these levels on your chart, as you will be needing them as a reference point to guide your trading activity for today. All right, so in the absence of no questions, I want to assume that we are all on the same page, so we shall be moving right into the next financial asset on our watch list. So the next financial asset on our watch list for today is the USTech100, popularly known as the NASDAQ. And remember, for those who are part of last week's trading session, we had a phenomenal movement on the USTech100, as we had both buying and selling opportunities, and in both instances we had significant movement in price action, giving us significant amount of profits along the line. Well, congratulations to everyone who was part of this profitable journey last week. So now that we are in the new week, let's take a fresh new look at the market and how we intend to position ourselves ahead of the New York session today. Now, the first thing we are going to be doing is to take an holistic perspective into the market by scaling up into the higher time frame. Now, if you look at the higher time frame from the daily time frame, it is quite clear that price action has been bullish. So I will just go down into the 4 hours time frame. Now, on the 4 hours time frame, I have a couple of levels here that we are going to be using to guide our trading activity. Now, the first thing first here is the fact that since the beginning of this month, price action has been on a strong bearish momentum, which of course may be the retracement of the impulsive move we saw on the higher time frame. Remember the daily time frame, it's quite clear that price action has been on a strong bullish momentum. Now, after connecting the series of lower highs here, we have this descending trend line, which of course is going to be one of the parameters we shall be using to guide our trading activity for today. Now, in addition to that descending trend line is this key level, a very strong psychological area along the $15,000 area. This level has been a major determinant of price action since the second quarter of this year. And in fact, I wouldn't want to go to that level. Let's just run through how it has been a major determinant of price action since this month. So we have the $15,000 level, and of course this level here is going to be our key level for this week. And what this simply means is that it will be guiding our trading activity. Now, if price action breaks out of the key level, we look out for patterns and structures that support the idea of buying this asset. But if price remains below the key level following that impulsive bearish move we noticed here last week, we might be getting ready for a downtrend. But we are not jumping into a conclusion here, as we're going to be looking at this from a technical standpoint. Now, the first thing first here is that descending trend line, which of course was broken during the second half of last week, remember? So we saw the breakout of the structure, and we all know that from a technical standpoint, when price action breaks out of a key structure such as the descending trend line, we expect that some point in time price is likely going to come back, retest the trend line with the anticipation of an uptrend continuation. And if you look at what happened here last week, we saw the breakout happen. In fact, price action followed through our technical expectations. We saw the breakout. We took advantage of that. We also joined the sell momentum as price action dropped back into that trend line. Now, the question going into the new week at this juncture is, will price action be respecting this structure, that is the breakout retest, to incite an uptrend continuation, or are we going to be seeing a scenario where price will be dropping back down below the descending trend line to incite a sell-off in this market? Now, we have this ascending trend line here, which has been supporting that bullish momentum. Price respected it, and in fact, it also shares a confluence with that descending trend line we spotted earlier. Now, to get a better perspective into what is happening here in such a way that we can position ourselves ahead of today, we want to see how the market is reacting to that key level at the $15,000 area. Remember, that key level is our yardstick for this week. Now, it now depends. Depending on how price action reacts to this key level will determine what our next line of action will be. So if selling pressure happens below the $15,000 mark, then we shall be looking out for selling opportunity. And mind you, we have an ascending trend line here. So if price move in that direction, we move our stop losses, secure the position while we wait and see how the market will be reacting to this ascending trend line. And if it so happens that price action begins to find buy pressure here, then we shall be getting ready to join the uptrend continuation. However, if price breaks down the ascending trend line, then we shall be looking out for selling pressure to join the downtrend scenario. Now, in order to have a better perspective into how market participants are reacting to the $15,000 level, we shall be scaling down into the 1 hour time frame. Now, when we scale down into the 1 hour time frame, this is what I was able to come up with this morning while I was trying to dissect how market participant is reacting to that key level. Now, one interesting thing that we've observed here since the beginning of this week is the fact that price action has been indecisive. Now, look at what has been going on since the early hours of today. Price action has been confined within our key level at the $15,000 mark, and that support line there had the 14,930 level to emphasize the level of uncertainty in this market. And you know how we do it whenever we have this kind of uncertainty. We have a flat range. So what we shall be doing is to exercise patience, waiting for a signal to either come in the form of the breakdown of the support line to give us an opportunity to sell, or the breakout retest of the resistance line to give us an opportunity to buy. So we have a simple setup going into the New York session today. So we shall remain patient, waiting for either the resistance line or the support line of this channel to be broken to give us trading opportunities. And of course, when this breakout happen or breakdown happen, let's ensure that we have our stop losses in place. Okay, for the buy position now, we shall be looking at about 50 pips stop loss on that one, and of course the same one stays relevant for the sell position too. So let's see how the market will play out in the next 24 hours, and we shall be back here tomorrow to review how well price action is doing. So all you want to be doing right now is to mark out these levels on your charts, as you will be needing them as a reference point to make your independent trading decision during the New York session today. So this is my view here on the USTech100. If you have any questions whatsoever, feel free to let me know in the comment section. So I will be taking the next 10 to 15 seconds to see if there are any questions, and you can as well use that time to mark out these levels on your chart. So I see a couple of comments here. I see your comment, Dino. Thank you very much. Ilana Atta, good morning to you. 4073, good morning to you. Khan 786, 226, and of course 239. Good morning to every one of you, and glad to have you around with us here today. Now, in the absence of no questions, I want to assume that we are all on the same page here. So permit me to move on to the next financial asset on our watch list. So the next asset on our watch list for today is going to be the GBPUSD, popularly known as the cable market. Now, before we begin here, I would like to run through the higher time frame to have an holistic perspective into what is going on here, so that we can be on the same page when I begin to talk about the structure here on the 1 hour time frame. And remember, last week we were selling the GBPUSD throughout the second half of last week, giving us significant amount of profit on that one. And for those who are part of that journey, well done and congratulations to you for being on standby to capitalize on that move. Now let's run through the higher time frame quickly. Let's see what is going on here. Now, I think we should start from the daily time frame, especially for those who are not part of our live session last week. Now, on the daily time frame, this is what we saw here last week, we took into consideration the nature of price action since the last quarter of last year, that is around September, October of last year. And when we look at the way price action has been playing out here, it is quite clear that the market is very, very bullish. And to further emphasize this bullish momentum, we connected a series of higher lows, and in fact, we had a couple of ascending trend line which buttresses the strength of the buyers in this particular market. Now, in addition to that ascending trend line is a key level we spotted here last week around the 1.2600 level. And in fact, if you look at this level closely since the month of May, it has been a major determinant of price action. Look at what happened here in the month of May. It was serving as a selling niche at some point before we saw this level broken in the month of June. And since the breakout of this level in the month of June, you can see how price action had remained above the 1.26, as every attempt by the sellers to break through this level has been met with strong resistance from the buyers, as you can see here. And in fact, despite the strong bearish momentum we witnessed during the last trading day of last week, we saw that price action culminated along the 1.2600 area. And one interesting thing about that culmination there is the fact that the 1.2600 level and the ascending trend line we identified earlier shares a beautiful confluence. And at this point, you will agree with me that we are at a crucial level in this market where anything could actually happen. So both the buyers and the sellers at this juncture have the tendency of pushing price in their favor. Now, going into the new week, the question now is, will price action be respecting that ascending trend line one more time, where the emergence of buy pressure around the 1.26 area could incite an uptrend continuation? Or are we going to be seeing a scenario where the breakdown of both the ascending trend line and the 1.26 level will be inciting a sell-off? Now you can see how important this zone is, hence we will need to scale down into the 4 hours time frame to see how we can position ourselves for any of these opportunities when they finally come. So scaling down into the 4 hours time frame, I was able to identify a couple of levels here which we're going to be using to guide our trading activity. Now the first thing first here is the descending trend line. Of course, since the mid-month of July, we noticed our price action has been finding lower highs in this market. And after connecting the series of lower highs, we have a descending trend line to work with. And as long as price remains below our descending trend line, you know that we look out for selling opportunities. Now, in addition to that descending trend line is the 1.267, a level which has been, we talked about this earlier on the 4 hours time frame, and you can see what happened here last week. We finally saw the breakdown of the 1.267 here during the second half of last week's trading session. And with the breakdown of this structure, you know, from a technical standpoint, when price action breaks down a key structure such as this level that we have here, we expect at some point in time price is likely going to come back and retest that structure to incite a downtrend continuation. And interestingly, that structure also lines up exactly with that descending trend line, which of course could be an area we could look out for selling opportunities if price action gets into that area. Now, a breakout of that level cannot be ignored as well. The potential of a breakout is still also there, where a breakout of the 1.267 and the ascending trend line could welcome an opportunity to join a reversal pattern. However, if price action does not go that far and instead it continues to find lower highs, then a breakdown of the 1.255 level will be welcoming more selling opportunities. So to guide our trading activity for this week, I have identified a level at the 1.26 area, which will be serving as our key level for the week. Remember, this is the 1.26 we identified on the daily time frame. So depending on how price reacts to this level, is going to be giving us an idea into where price will be going. So if price remains below the key level, we will look out for selling opportunities. But if price breaks out of the key level, we shall be buying, but we shall note that this buying will be a counter trend opportunity, where if price gets into the trend line or the 1.267 area, we move our stop loss accordingly while we wait and see how the market will react to that structure to determine if we are going to be adding more buy position at the breakout of structure, or going to be joining a sell opportunity if continued selling pressure resumes around that area. Now let us see how the market participant has been reacting to our week's key level at the 1.26 area since the beginning of this week. Now, scaling down into the 1 hour time frame, while trying to decipher where price action is likely going to be going for this week, I was able to come up with a beautiful flat channel to guide our trading activity. Though price action has been oscillating around our key level at the 1.26, and along the line it shows price has been confined within the 1.261 and the 1.25790 area to reveal the level of uncertainty in this market. How you know when we have a flat channel like this, we want to exercise patience, waiting for either a breakout of the resistance line to give us an opportunity to buy, or the breakdown of the support line here to give us an opportunity to sell. So with this information we have gathered, I personally have a sell stop order triggered already after citing this breakdown of the structure, and I'm hoping the price action will continue to the downside in that regard. So since price action has been on a strong bearish momentum in the last 3-4 weeks now, let's talk about the potentials of sellers first of all. Now, for us to be selling the GBPUSD today, I want to be looking out for opportunities below the 1.25790 area, and that was why I took advantage of that selling opportunity with my stop loss anywhere around that key level. Now, for those who have missed that one, well, presently I'm running a loss at this point in time, but still hopefully price action will still come back below that area. So anywhere below the 1.25790 at this point still looks promising for selling opportunities. And if price action continues to find lower lows and lower highs, then a further breakdown of the 1.25500 level, which happens to be the lowest point price action has been in a long time, will be welcoming more selling opportunities in this market. So we want to be marking out these levels for selling opportunities for today. However, in as much as we're looking out for selling opportunities in this market, we cannot ignore the potential of buyers too, as well, as we could have a reversal setup gradually unfold here. Now remember what I shared with you on the 4 hours time frame, where I talked about the breakdown of the 1.26700 level, which happened last week, and from a technical standpoint, that price could still come back to retest that structure to incite a downtrend scenario. Now, if price action breaks out of the 1.26 area and the 1.261, which happens to be the resistance zone for this week, this is the highest point where price action has been, then I want to be looking out for buying opportunities at the breakout retest of the structure. Now, if price continues to climb into that zone, which captures the 1.267, and of course that descending trend line we spotted at the beginning of the week, we want to be moving our stop loss on that buy position to secure the current positions while we wait and see how the market will be reacting to the zone. Now, depending on how price reacts to the zone will determine if we are going to be adding more buy position. That is, if price action goes that far, a breakout retest will welcome buying opportunities. However, if selling pressure resumes below the structure, then price is about to retest the 1.267, which was broken last week, to incite a downtrend continuation. So that is what we shall be looking at if price action ever breaks out of the zone that we identified here. So we want to be marking out these levels on our chart, as we shall be using them as a reference point to guide our independent trading decisions on this current market structure. So these are my views here on the GBPUSD for today. If you have any questions whatsoever, feel free to let me know in the comment section. Of course, I am here and willing to be of help in that regard. So I will be taking the next 10 to 15 seconds as usual to see if there are any questions whatsoever before we move right into what I will call the last asset on our watch list for this week. All right, so in the absence of no questions, I want to assume that we are on the same page. So permits me to move right into the next financial asset on our watch list. All right, so the next financial asset on our watch list for today is the XAUUSD, popularly known as the gold spot. And in fact, you all know this is my favorite asset among the assets we have been monitoring so far. Now, the first thing we are going to be doing here is to run through the higher time frame so that we can have an holistic perspective into what is going on here, and of course, if we can identify simple setups we can align with structures on our 1 hour time frame to make an informed trading decision. So the first thing we are going to be doing here is to scale up into the daily time frame. Now, I would like to refresh our memories as regards to the current setup on the daily time frame. I've talked about this a countless of times, but for those who are not part of the live session last week, well, this will be an opportunity for you to be on the same page with us all here. Now, looking at the structure here on the daily time frame, since the last quarter of last year, I think about September, October, November of last year, you'll see that price action has consistently and uniformly found higher highs and higher lows. And to further buttress the strength of the buyers in this market, we have a couple of ascending trend line here after connecting the series of higher lows. And this further buttresses the strength of buyers, and of course you can see how price action has consistently respected our trend line. Now, in addition to the structure is a level which we identified at the 1,900. For those who have been with us since the beginning of this year, you know how important this level has been for us. Look at what happened at the beginning of the year. It was a buying niche at some point before that level was broken to the downside in the month of February. Now, in the month of March, we saw price action climb above that level, and since that moment, price action has been trading above that structure, as every attempt by the sellers to come down, to break through, to push price to the downside has always been negated by the buyers. Look at what happened here in the month of July. We saw what happened. Then fast forward into about 2 weeks ago, we saw how sellers broke down that structure, but it didn't last long as buyers came back to take over this market. And of course, we were part of this bullish momentum last week. Now, with what we have so far here, you would agree with me that this area is an accumulation phase, as you can see how sellers have always struggled when price action gets into that zone. And what this simply tells us is that the buyers are very strong within the zone, while it will make a lot of sense to look out for buying opportunity as long as price remains above that area. Now, one more thing here that we need to also take into consideration is the fact that as soon as price tested that new high at the $2,078 level, we saw sharp rejection, and that led into lower highs in this market. And if you look at this at a glance, you'll say, this is more of a bearish momentum, right? But if you take a further look at this current structure, you will see that the inability of price action to find a lower low is a sign that this this trend line may likely be broken anytime soon, as the consistent buy pressure around the 1,900 appears to be negating the selling pressure which comes in as a result of the lower highs. But if we are going to be selling, of course, in this market, it will feel comfortable selling at the breakdown retest of the 1,900. And if this is not happening, are we going to still look out for selling opportunity despite price remaining above the 1,900? Well, we shall be going into the details when we scale down into the lower time frame. And I also want to talk about the potentials of buyers breaking out of the structure too as well. Now, with this information we have gathered here, let's scale down into the 4 hours time frame. Now, on the 4 hours time frame, I was able to identify a simple setup here, which we are going to be using to guide our trading activity for this week. Now, the first thing you will observe here since the last week of the month of July is that price action had consistently found lower highs, as you will see here. And as a result of this, we connected the lower highs to give us a couple of descending trend line. And for those who have been with us in this community for a while now, you know how we use our descending trend line. As long as price remains below the descending trend line, we shall continue to look out for patterns and structures that support the idea of selling. Now, in addition to that trend line is our key level for this week, which is situated at the $1,920 zone. Now, look at this zone here. This level here has been a buying niche at some point in time during the early days of this week, this month, before price action finally broke down of the zone during the second week of this month. And since then, price action had remained below that area, giving us a clue into how strong the sellers are. And during the course of last week's trading session, we saw, despite the strong bullish momentum we witnessed, we saw that as soon as price came into the zone, we begin to see selling pressure around this area. So as a result of this character in price action, I was able to confirm this zone as a supply zone, and if price still remains below the supply zone, and of course below our key level at 1,920, and of course below the descending trend line, we shall continue to look out for patterns and structures that support the idea of selling this asset. Now, for me to join any bearish momentum in this market from an holistic standpoint, from a higher time frame perspective, I would like to see price action break down the 1,912 retest of structure before joining any bearish move. However, if price action goes on to break out of the 1,920, which of course will have led to the breakout of that descending trend line, then this will be a good sign that the trend lines may no longer have the capacity to continue to negate that bullish attempt, hereby giving us an opportunity to join a bullish up momentum. Now, with this information we have gathered here, let's see how market participants has been reacting to the zone since the early hours of this week to see where it is likely for price action to be going for this week. Now, with this information here, we shall scale down into the 1 hour time frame. Now, on the 1 hour time frame, this is what I was able to come up with since the beginning of the week. Now, you can see what has been going on here. As you will see, though the week started on a bullish note, as you will see, price started around the $1,914.50 level, climbing up, trying to push price to the upside. But one thing you will notice here is that as soon as price got into the $1,917.60 level, we begin to see sharp rejection of that area, giving us a barrier that's negating all bullish attempt to break out of that zone. Now, if we go a step further to look at the nature of the candles of the week of these candles, you will see sharp rejection of that area, which gives us multiple shooting star candles around that area. And from a technical standpoint, when you notice a shooting star candle, it reveals the presence of sellers around this area. Now, with this in mind, I was of the opinion that we are likely going to be seeing some bearish momentum today. Now, in addition to that, if you look at this structure here, since last week, Thursday, you will see we have a descending trend line. So we do want to be marking out this level on this trend line, our chart, as we shall be using it as one of the parameters to guide our trading activity for today. And what this simply means is that as long as price remains below that descending trend line, we continue to look out for patterns and structures that will support the idea of selling. Now, in addition to this trend line we have here is the range which we spotted here. Now, look at what has been going on since the early hours of today. Price has been confined within the $1,917.60 level and the $1,914.50 level to emphasize the level of uncertainty in this market. And from a technical standpoint, you know how we do it whenever we have this kind of range. We want to wait patiently for a signal to come, which of course will either come in the form of a breakout retest of the resistance line to give us an opportunity to buy, or the breakdown retest of the support line to give us an opportunity to sell. Now, personally, I already had a sell position triggered after price broke down and retested the $1,914.50 level to trigger my first sell position. So I'm still hoping the price action will continue in that direction as price still remains below our descending trend line, remains below our key level, remains below the supply zone, and of course has broken down the support line of that channel we just identified here. So we're having a sell stop loss of about 30 pips on this one if price action will continue to the downside. And if you had not taken advantage of that opportunity, well, you can position yourself right now anywhere below the $1,914.50 level to capitalize on that bearish momentum. And if price action continues to drop and find lower lows and lower highs, then a further breakdown of the 1,912 will be welcoming more selling opportunities. And one more thing here, the breakdown of the 1,904 level will also be welcoming more opportunities in this market. So I didn't mark that level out before, so I will be including that into selling potentials for this current structure. So this is how we are going to be managing a sell position in this market for today. So it's been a very long bullish bearish momentum. That is one. We are prices under the bearish trend lines we identified on the higher time frame. Prices below our key level at the 1,920, and of course price is below the supply zone we identified on the higher time frame. And all these parameters here points at the potentials of the sellers pushing price to the downside. But in as much as we're looking out for selling opportunities, you know how we do it in this community. We also want to keep tab with the potentials the buyers also have in this market. And for us to buy, I told you on the higher time frame that I will need price action to break out of that supply of that key level at the 1920 before I will capitalize on an opportunity to buy. But it's not all the time we wait for this kind of structures to come in before we jump into a position. So what we are going to be doing here is to see if the market will reveal some higher highs and higher lows, which will be a good sign for us to be part of a bullish momentum even before the breakout of that key level at the 1920 happens. Now, in order to guide this, we already have a trend line which we spotted here, which has been supporting this bearish momentum since last week Thursday. And as long as price remains below the trend line, you know we look out for selling opportunities. But if at any point in time today, price action breaks out of this trend line, then this will be a signal that we might likely be seeing a momentum shift happen. So in that regard, we shall be looking forward to buying opportunities only if price action breaks out of that descending trend line. Now remember that we are not going to be getting too excited here by buying right away, and this is simply because we're still within the seller's territory. So we will need some confirmations to happen before we jump into a buy position. And you also want to take note that a breakout of that descending trend line could still turn out to be a false breakout. Now, for us to validate that breakout, we will need some confirmations to happen. And in that regard, once we sight a breakout of that structure, we scale down into our lower time frame where we shall be looking out for confirmations such as retest of the trend line that was broken, the appearance of buy pressure. Then we want to be part of a buy position. Then if price action goes on to break out of the $1,917.60 level, we add more position to our existing trade. And if price action goes on to break out of the 1,920 level, we will be adding more position to maximize the potential of that bullish move. So this is how we are going to be managing our position here on the XAUUSD for today. So we have a simple setup which we are going to be using to guide our trading activity. We have a range. We have the $1,914.50 level where we have agreed that anywhere below the structure will be welcoming selling opportunities. And in fact, we have multiple levels here that will give us an opportunity to maximize the potential of this bearish move if price action continues to find lower lows and lower highs. However, we talked about the potentials of the buyers too as well. As we said, we're going to be positioning ourselves anywhere above the descending trend line if we have a breakout retest of the structure, and we'll look out for more opportunities to maximize the potential of this bullish move if price breaks out of the $1,917.60 level and of course the $1,920 area. So with this scenario we have here, you do want to be marking out these levels on your chart, as you will be needing them as a reference point to guide your independent trading decisions for today. So these are my views here on the XAUUSD, and if you have any questions or you need me to do some clarifications whatsoever, feel free to let me know in the comment section. So I will be taking the next 10 to 15 seconds to see if there are any questions whatsoever before we draw the curtain for today's session. All right. So in the absence of no questions, I want to assume that we are all on the same page here. And in fact, I'm very confident that we are well equipped and ready to capitalize on potential trading opportunities during the New York session today, as we were able to identify simple setups using fundamental tools such as trend lines, key levels, and chart patterns to identify potential trading opportunity. So I encourage you to remain very patient. Let's allow the setups to mature before we jump into any positions during the New York session today. And what are the assets we talked about today? We talked about the US All Sports. We talked about the USTech 100, popularly known as the NASDAQ. We talked about the XAUUSD, popularly known as the Gold Sports. And of course, we also attended to the GBPUSD. And for those who don't know, I can see some couple of comments in the comment section. Trader Pro Life dropping some links in the comment section. Please, I would like to state here that this link should be ignored as it has nothing to do with the extreme speed. So please ignore the link, and I wouldn't want you to fall for any fraudulent practices along the line. So please ignore any links from that refers you to another platform outside of the extreme speed platform. So on this note, I wish you all the best of luck today. And for those who joined us for the first time today, I hope you are able to gain one or two things from what we discussed here today. I encourage you to spend more time with us. The more time you spend with us will enhance your proficiency in price action analysis, and of course along the line you will get to understand how things works here and be able to use the information you have gathered here to eventually guide your independent trading decisions on your own account. So on this note, I wish you all the best of luck today. I look forward to seeing you same time tomorrow as we come here again to review how well these assets have been doing, and at the same time get ready for tomorrow's trading session. Do have a wonderful evening, everyone. Bye bye.